I have the privilege of heading the Pakistan Business Council, which is a business advocacy body. A hallmark of success of advocacy is when the finance minister repeats virtually everything that you've been talking about for the last year or whatever period of time that you've been talking about these things. We've also been very fortunate in engaging with the finance minister. I think I'm trying to remember, were there 4 weekends or 5 weekends that we've spent with her, trying to bring her up to date with the current challenges as well as some of the opportunities. And the mere fact that she's repeated a lot of it and implemented a few of those, given the limited time that she's been there, I think is credit to her. She's a brave person. This is the second time that she's taken on a great responsibility at a very tough time, and I think we need to applaud her for her strength, courage, and abilities. Now that said, a lot of things that she's mentioned are defects or flaws that exist within our economies. And these have existed for many years, for many decades, as she rightly pointed out. I think she mentioned 3 decades, it's probably longer. Successive governments have failed to effect fundamental reforms. These are flaws that have been there for many years. They have not been corrected. 23 IMF programs later, some of the solutions that IMF has tried to impose have also not succeeded. But I don't blame the IMF. It is primarily our own fault and our own weak political will and our inability to implement things that we know need to be done, but they're not done. But we are not going to spend a significant amount of time today talking about what is wrong in the policy framework, although I have to admit that much as I would try and much as the titans that I have with me would try, it is very difficult to miss those. We are actually going to focus on something that may, I hope, come across to you as a constructive criticism, and mostly it is about us, about what role the business has to play in trying to get a sense of responsibility and contribute positively to the economy. So what I'm trying to say here is this is time for business to hold a mirror to itself and to see, are we as a business community doing what is required by the country, by the planet, and of course by the people of this country. The fact is, there is a perverse consensus within the political leaderships in this country and the major stakeholders, and the perverse consensus is to maintain the status quo. We in business need to make up our mind, do we want to be part of the status quo and let the economy sink as it has been doing, or do we want to make a change? This is all about the Future Summit. Yeah? So shall we today try and identify what are the basic things that we need to do differently? Okay, when the economists look at performance of a country, they talk about the twin deficits. They talk about the external account deficit, and they talk about the fiscal account deficit. But in my opinion, there is a third, more alarming and a rapidly growing deficit, which is actually responsible for the other 2 deficits. And this is the trust deficit. This is a deficit between the key institutions of this country, between the political parties, with the judiciary, within the judiciary, within the establishment, and of course, what is loosely referred to as elite or elite capture. Now, if we in business think that we are not part of the elite capture, we are fooling ourselves. If you look at the PSX 25, top 25 companies this year, 60% of those are living off the state in one way or the other. They are enjoying subsidies, they are enjoying guaranteed returns, they are enjoying import tariff protection. There are banks amongst us which find it very comfortable to lend to the government and shy of lending to the key sectors like agriculture and SMEs. Of course, the big boys are able to borrow from the banks. Now, can a failing economy and I call it a failing economy because we are not out of the woods. Whatever the SBA has achieved, standby arrangement is a bridging loan. It is a temporary relief. We have to contend with fundamental reforms still. Do we, as business, want to put burden on a government which is getting weaker by the day and which is not able to find enough to invest in socio-economic development? Pakistan stands at number 4 amongst these South Asian countries when you compare it with India, Bangladesh, and Sri Lanka. The biggest challenge that we have is to find the resources to invest in the socio-economic development of the country. So, what does the country need? As the finance minister just pointed out, we need exports very badly, significantly more exports than we do. We also want to create an import substitution, but primarily in our food items, because it just does not make sense for an agrarian society to import as much as we do of food. But unfortunately, aside from textiles, which have some external orientation, most of our businesses are very inward-looking, and we do not have that export competitiveness. Is that a task that the government alone has to do? Clearly not. It is the business that has to deliver on that. The other key issue is that there are 240 million people in the country. It's a large population. And so it is very attractive for our businesses to focus on domestic market. Our FDI is virtually 99.99% focused on benefiting from the demographic dividend of a large population, rapidly urbanizing, young people, very adaptable to move from open goods into branded products. I work for one of those companies, so I can speak with some experience. And so is our domestic players. Our utility rates are significantly higher than the regional players or the regional competitors. So we have to contend with that. Our trade agreements do not open us up in a suitable manner relative to countries like Vietnam in particular in terms of market access. The trade agreement with China has not worked to Pakistan's advantage. As a result of some renegotiation by Yunus Daga, who was going to be here in the panel, but unfortunately is unwell, is not able to join us, it improved our standing to the degree that by 2030, 75% of the goods that we produce will be able to sell duty-free into China. But I can tell you, Bangladesh, without any free trade agreement, today can sell 98% of its goods to China. So this is the state of a failure of a trade diplomacy. Our fiscal policies obviously goes without saying, everybody knows, burden the few and keep on putting additional burden as we speak. There were changes even yesterday, additional taxes on banks, for example. Our import tariffs are high, as the finance minister mentioned. This is all alarmingly leading to further informalization of the economy. Smuggling has grown, counterfeiting is growing, under-invoicing is growing. PBC has identified a significant value of under-invoicing and therefore loss of revenue. So all these are issues that are confronting. But moving aside from the pure economics, but looking at the social part of how our business is run, gender inclusion is significantly lower in Pakistan than it is in Bangladesh. A lot of businesses still regard having one solitary woman on the board as their contribution to gender inclusivity. That clearly is not enough. We need to develop talent pipelines. Environmental responsibility for many of the businesses starts at the factory gate and ends at the factory gate, and that is clearly not acceptable. We have to take from sourcing to the end point of consumption as our responsibility, as business responsibility. And of course, labor compliance is also something that we regard as our responsibility for our own employees, but we don't care much about what happens to the indirect employees. So these are some of the factors that I would like to take up with our very able titans who are sitting here. I'm excluding myself from the definition of titans. Titans are people who have a lot of power, influence, and intellect, and I lack all of those abilities. But I return to you, Arif Habib Saab. Is rent seeking an issue that is, that is facing Pakistan and businesses? And is there a justification for this? I know in the past there may have been some justification, but is there an ongoing justification? How would we defend that as being the leaders of business?
So, first of all, thank you, Nutshell and Asfar Hassan Saab, for providing this opportunity of interacting with such a important audience here. You referred in your introduction about the top companies, top 25 companies, and your question about the rent seeking. I believe those companies which have qualified, there are 4 sectors which in fact are dominating in top 25 companies list. One is E&P, number 2 is power sector, and number 3 is fertilizer, and number 4 is banking sector. So you see the first 3 mainly are having a dollar-based revenues and returns. And because of the recent devaluation of Pakistani rupee, they have been the beneficiary of that, and in terms of rupee, their revenues have substantially improved. And I think if we take E&P, E&P has the pricing mechanism with international market, you see. So when the international market moves in that direction, their products are, in fact, priced in. And in few instances, when the energy prices goes very high, then their correlation is not that high. As far as the energy sector is concerned, again, they have the dollar-based guaranteed return, and on that basis, but still, a lot of investors see the risk in that, and they have the problems of getting their payments on the time. The fertilizer sector, in fact, there is a misperception that there is a subsidy on it. There is no subsidy on it. You see that they are being provided a lower price gas, but their local pricing is much lower than the international market. So generally, we when calculate, the farmers, in fact, are getting the fertilizer at a lower price in comparison to international market. For example, presently, the urea bag price internationally is about 7,000 rupees per bag, whereas now the price, in fact, has increased to 3,700, 3,600. It used to be 2,500. So 1/3 of the international price, the urea was being sold in Pakistan. So out of that 2/3 price differential, the gas price impact was only 1/3 of that. 2/3 was being borne by the fertilizer companies. So again, there was no subsidy to the fertilizer companies. Yes, the farmers are being provided urea at a lower price, mainly because of the food security consideration. The banks, in fact, have the beneficiary because of the high inflation in Pakistan and high interest rate, and because of that, their margins, in fact, have increased, and they are making good money out of it. And mainly because of the weak economic conditions of the country, in fact, the government has been the biggest borrower, and that biggest borrower is the main reason that they put most of their money into that. As far as the availability of funds for the private sector is concerned, I don't see any issue in that. There are not sufficient takers of the loan in Pakistan, mainly because of the high cost of energy here, high interest rate, and high in fact, taxation rate. So there are 3 major big problems in Pakistan economy. And because of that, I think there is very, very slim chances of, in fact, attracting investment from outside Pakistan, mainly because of these three negative factors. Unless we, in fact, address these factors, and to me, I believe that this will be possible if the interest rates are go down. They go down because presently the 22% policy rate, I think, is not, in fact, affordable. Is not affordable, and it's killing for government financing itself. And I believe that in a period of about 1 to 1.5 years, I think that this policy rate would come down to 12%. And if the 10% reduction in the policy rate would save Pakistan about 3 trillion rupees. And that 3 trillion, I believe, I would suggest, would be spent in fact, reducing the tax rate here. That will definitely be contributing to the lower interest rate, would help the businesses. But the energy also being, in fact, priced in such a way that our exports become competitive regionally. So with these three negatives, it would be very, very difficult to improve in the industrial exports. As far as the IT is concerned, yes, there is a lot of scope there, and we have the raw material, we have the human resource there, and we can then galvanize them and, in fact, train them and use them for improving our exports in IT. Agriculture, yes, I think agriculture is the area which can, in fact, has a short time of turnaround time, and there I think Pakistan has a lot of scope. The import substitution would also be, and then we can also produce surplus for export.
Thank you, Arbhai. Okay, so remaining on agriculture, I want to move to Zilaf. Zilaf happens to be, heading English Biscuits, which is obviously, using agricultural produce to make its products. So turning to you, two questions actually. The first question is, the SIFC is trying to bring investment into the agriculture sector through corporate farming and so on. How will that affect Pakistan's food security? I know it would assure the food security of the investor countries. How would that protect Pakistan's food security? And why can't Pakistan, manage to cultivate that land itself? I mean, Pakistanis manage to cultivate that land itself. So that's my first question to you.
Well, thank you very much, Ehsan. It's first and foremost a pleasure being here, and I've always enjoyed my conversations with you as a moderator. It's been a positive experience, so look forward to the same. Thank you, Nutshell and Ehsan and all the participants for being here. So if you could allow me the indulgence of just taking a lead from your opening remarks, and then I will get to your question, because I felt we are here in the Future Summit, the big picture, investment business. So, and I speak not just as the CEO of EBM, but also as a concerned citizen, so who actually, it drives from the vision of an accountable, transparent, and prosperous Pakistan. So the point that I want to first talk about is the trust deficit that you spoke about. And I think I would like to just quickly make 3 points related to that, because we are here representing the private sector. Yes, the trust deficit is for real. The World Economic Forum survey in 2022 stated that 22% of the Pakistanis have trust and faith in their institutions. And yes, we talk about the economic, fiscal and current account deficits, but this is a very significant deficit for any kind of economic growth. So what do we the 3 points that I was going to make was, number one, the trust deficit, number two, the heterogeneity of the private sector, And number three, the positive impact that the private sector has. So, yes, I think as a private sector, we first need to acknowledge and recognize that this exists and that we need to be bridging this gap. And to do that, I think we speak from, if I look at it, I come from a brand perspective, if you look at it from not just Pakistan, but global numbers, consumers around the world trust brands more than their governments or media. So yes, there is a role that we have to play, but we have to first reflect on what is it that's leading to this trust deficit or this gap. And you mentioned one, which is, so we have to be eschewing rent seeking. We have to be looking at ethical business practices. We have to be looking at competitiveness, and we have to be looking at innovation. And that is what we can do. And I take that as bringing in the point of heterogeneity of the private sector. And it's not a monolith. It is a diverse group. And it encompasses a lot. So let's also look at the policies and legislation and frameworks to be doing justice and recognizing that, and also be providing level playing fields. But they are doing they're doing a great job. So, and the positive aspect, I again can just give you example of the FMCG sector, which I'm sure you know now, and we've heard from we are hearing from other sectors as well. It is, if we look at whether it is alignment with the sustainability goals, whether it is competitiveness, whether it is innovation, whether it is good business practices, we have examples that we can be looking up to, and we can be leveraging that. So, you know, it's about looking forward. It's about, perception is reality. So perception is what we have to be addressing, which is with the image, with the values, with our practices, and that should lead to the private sector being able to play the role that it needs to be playing. Now coming to your question of, if I remember correctly, of agriculture and corporate farming. Complex, very complex. But I would say I am cautiously optimistic. So yes, the agriculture sector, it is underperforming. We are an agrarian economy, and we, the very existence of Pakistan and prosperity depends on it. So there's no denying that. Yes, we have a food security issue. We are number 122 out of 126 in the global food health index, hunger index, which comes in the serious range. So of course there is an issue. Is investment in corporate farming, agriculture, by private sector, is that the answer? It depends on the intent, number one. Number two, yes, it with the right kind of legislation, with the right kind of policies, to ensure that it addresses what we are setting out to address. And the last thing that you spoke about was about, you know, the private businesses like ours getting into corporate farming and agriculture. Yes, from the lens of the future, one can be looking at these things. But we also have to deal with the reality of what is the current agriculture sector and what are the on-ground realities. So when we look at big businesses and crops which actually have support prices and which actually have intermediaries and which actually have, so yes, there are complexities, but you can look at them. And you should be looking at them because you bring in the entrepreneurial spirit and the expertise.
Thank you, Zilaf. I think,
yes.
Yeah. So just because we have limited time, I want to move to Maheen. Maheen, of course, heads Infazamin. And Maheen, could you please share with us the role that Infazamin is playing and can potentially play, particularly to promote export-oriented and agricultural sectors? Thank you.
Assalamu alaikum, everyone, and always a pleasure to be here, Asfar. Thank you for having me here again, and great to be speaking to all the wonderful people on the panel today. We've been talking about a lot about the private sector, and I think one of the key things that we have to understand is the private sector needs one basic ingredient to grow, and that's capital. It's funding, it's money. Because without that, how do you scale up? And I think let's talk a bit about what the problem actually has been in Pakistan. If we go back to the 1960s, and I do not want to make this a history lesson, but I think this is important. The total private sector lending as a percentage of GDP was approximately 25%. And back in the 60s, we were on par with a lot of emerging economies. India was about 24, Bangladesh was close to 14. You had the big giants, you had China, Malaysia sitting at 70, 80%. But fast forward 30 years or 40 years, and anyone want to venture a guess as to where we stand today in terms of private sector lending from the banking system? I'll give you some points. Bangladesh is at 45, India is at about 55. This is just lending as a percent of GDP. China is close to over 100%. Malaysia is crossed 100%. And we know how those economies have done. Any idea where we stand as of last year's numbers on just that metric? We were 25 for about 20, 30 years. We were averaging that. Guess where we're at today? 10? So we've actually dropped down to the bottom 4 of emerging markets, which is at just a bare 17%. And this is last year. If you look at 23, we're probably even lower. So if we're not giving our businesses, our private sector, the money to grow, what do we expect is going to happen to that private sector? It's going to keep rolling over whatever it has and trying to grow within that ambit, right? And this comes back to what our panelists have been discussing, which is a trust deficit. Why aren't the banks lending? The banks are not lending because there is an inherent risk in lending. And in order to overcome that risk, that private sector also has to step up and mitigate some of that risk. It has to be both of them coming together. But instead, what we've seen is the government has crowded out a lot of that private sector investor because obviously it's easier to lend to government. And this is at a time, we've come down from 25 to 17, at a time when the banking sector assets have gone up in the last 5 years from 18 trillion rupees to 34 trillion rupees today. But only about 11 trillion actually goes to the private sector in terms of lending. So why am I giving you this story? Because we have a market failure in place. And it's institutions such as Infazamin, we're not the only ones. We have others such as the IFC, you have FMO, you have BII, who all try and address these market failures. But what have we done in the last 2 years? So we're an institution that's just barely 2.5 years old in Pakistan, but we've already managed to mobilize almost 4 billion rupees just in the last couple of years towards private sector lending. We've done a local bond issue, we've done a banking sector transaction, and both of these borrowers were those that were looking for some innovation, looking for something different, and looking to raise capital. And if I talk about the bond transaction that we recently did, forget that it was a gender bond. Let's talk about the transaction in itself. What was the problem statement? We had a microfinance institution, and we know how much risk microfinance carries. And what we did is we de-risked it. So we took that risk away from the microfinance and we said Infazamin will absorb that risk in case of any default. So we will stand behind your lending. And that's precisely what we did with Kash Foundation. And we launched a bond in the market of about 2 billion rupees, which was subscribed to fully by over 28 institutional capital market investors. And that was your mutual funds, it was your pension funds, it was your insurance companies. And that's the kind of crowding in that you need to see. Now, the scale may be small, but you can certainly translate it across multiple different industries. So what we're now trying to do, and this has always been our strategy, and we have a few broad themes that we look at. One is climate adaptation. We are way beyond the mitigation stage. We are going to suffer from climate change, so we have to adapt. The second is export orientation and import substitution. The third is energy resilience, and the fourth is food security. These are the four sort of components that we're looking at. And we've just recently closed one that covers the climate aspect as well as the gender aspect. But what we're seeing in front of us is actually a surging demand of private companies coming to us and saying, please, can you look at our project, can we guarantee it? So I think when we talk about demand, we were surprised to see so many corporates, and we're not talking about the big business groups or the elites here. We're talking about, and that's the most exciting part, because we're talking about the next layer of businesses that want to become the future big owners of the country. And there we are seeing great projects come through in agriculture. We're working with the private parties. We're working with the federal government on looking at corporate farming, on looking at storage facilities, on looking at research and training of farmers across, small farmers, across markets to see how can we help improve the yields of the crops that are grown here. We're also looking at renewable and recyclable businesses. So actually, we are huge consumers, or food consumers, of one particular item. Anyone want to guess what that item is? One thing we love to put in our food. We import it and we eat a lot of it. Any guesses? Oil. So we're one of the largest edible oil consumers in most emerging markets, and that's a population metric. But the recycling of that oil is not often done, except now, where we are actually seeing industries setting up collection points for used oil from all the restaurants, from all the businesses, and recycling it into fuel that can be used in cars, into biodiesel. And this is a pure export-led kind of industry. We are seeing a similar trend towards plastics as well. So, you know, I think there is so much innovation already happening in Pakistan's corporate sector. And you know, we are seeing, I think, a demand of almost 50 billion rupees of borrowing requirement that is coming from the private sector and needs to be funded by the capital markets and the banking sector of this country. So while we are a solution to a segment of that, we can't guarantee everyone, and not everyone really needs a guarantee. But we try and fit in as many pieces of the puzzle as we can. And even if we do one project, that one project then demonstrates to the market how to assess risk, price that risk, and do the next project without a guarantee. Because really that's how we're going to be able to push this entire sort of juggernaut forward, which is where we have to take the Pak economy to. Thank you.
Okay, thank you. I mean, that's really very inspiring. It is actually guaranteeing the future. One last question, Aribhai, aapse. When will there be a Pakistani multinational abroad?
The Pakistanis don't have money. And whoever has money, they are blamed to be rent seeker. So number one. Number two, you see that Pakistan is, according to the international standards, are not so big. And in order to invest outside Pakistan, first of all, you are allowed to invest up to $500,000, I believe, with the approval of State Bank. And over and above $500,000, you have to apply to the ECC.
5 million, but
Five.
still quite low.
It's quite, and there you have to go there And when you apply to them, they say, why are you going to outside Pakistan? We want investment into Pakistan, so make investment here. We had tried to put a fertilizer unit in USA, and in that we were able to structure do a financial structuring in which the foreign banks were in fact indicating to finance us in foreign currency on the basis of our local assets here. So, but in that again, we in fact couldn't get the permission from the ECC, right? So but I believe that the main reason is that our entrepreneurs and our industrialists know that big that they can go outside Pakistan and put industries. Yes, the retail investors, they go to Dubai and Malaysia and other areas, but not in a big and not in a formal way, so informal way. So I think once, and because of the continuous devaluation, you see, I when calculate in whatever, in fact, wealth we had in 2007 and 8 in dollar terms, today, though we have quadrupled in rupees term, but in dollar terms we are there, still there at 2007 level. So this is the main, I think, issue. And as far as I was last week in Silicon Valley, there many Pakistanis have done well. In fact, there are Pakistanis who, in fact, had started there, and their company's valuation has now become, valuation is about $7 billion. The others, in fact, has the valuation of $43 billion. So they are doing well there, and I think they need to be facilitated more in order them to grow, and in fact, they in fact transfer their business, or they in fact, the Pakistanis are benefited with their roots there in Silicon Valley. So I think in that I believe I see an opportunity.
Yeah. Okay, so I think that is probably all the time that we have. Do we have some more time? Okay, so I just wanted to sum it all up. I think one of the reasons why Pakistani businesses have not been able to build scale is not because we don't have a large population. It's because our fiscal authorities or our fiscal regulations do not encourage wealth creation or aggregation or consolidation or scale. There is, for example, if a large successful company wants to diversify and wants to list a subsidiary and invite capital, widen the shareholding, they are subjected to multiple levels of taxation on the intercorporate dividends. That's something that we've been taking up with multiple governments, but that there appears to be no solution. If you become successful, you become large, they put super tax on you. So instead of 29%, your tax rate goes up to 39%. So I know, I mean, if there are some, tax advisors here.
In fact, it goes up to 65%.
Yeah, but I'm saying for a normal company. Yeah? So the point I'm trying to make is that what happens is that currently there are a number of large organizations that are taking advice on fragmenting their operations, splitting them up, so that they don't have to end up paying super tax in one if they remain as a single entity. This is totally doesn't make any sense at all. We should really be encouraging scale. We should be rewarding profit, and of course we should be taxing profit, but not by putting an additional tax. But forgetting even the tax rate, it is the sheer harassment. If the harassment remains at the current level, why should anybody want to come in and become a taxpayer? Wouldn't you rather than remain under the radar as a small or a medium-sized company? And the last but not the least, there is actually no incentive to corporatize. The tax rates on an individual businessman or association of persons or partnerships, as they're otherwise called, is significantly lower. When they withdraw money from their business, there's no tax. But a corporate, when it withdraws, pays a dividend, there's a 15% tax, in addition to whatever taxes they've been paid. So actually, our entire corporate sector, our company law, our fiscal laws, they all need to be looked at. So with that point, I mean, given that there is so much to do, there's always hope. So I want to end up on that note. So thank you very much to my Titans. You've done a great job. And
Thank you so much.